I think everyone should have a Roth IRA. It's the most powerful, probably investment account there is. I mean, it's literally you're investing with after tax money, right? And everything, all the wealth that you build in that account is tax free. Once you're 59 and a half, you can take that money out. Another great thing is it can actually be like another emergency fund because all the contributions that you put in, you can literally take out if you need it, right? Of course, you can't touch the gains that you have in it. The IRS basically treats it like a good faith thing. They know, okay, you put in 20K over life, you can take out 20K. Let's say you want to buy a home, once you're ready, or you want to, start a business or something, you can take that money out and use it as seed money, right? So to me, that's like the most powerful account. So start there, depending on your income level. Of course, if you're employed, self-employed, you have the solo 401k. If you're employed, you can, tap into the 401k there. If they have great options, if they don't, just invest up to the match. If they do match it, and just, then you can move on to the taxable account, right? Taxable account is another account that everyone needs, right? Most people say, oh, I just do my 401k and I call it a day. Yeah, but then you have to wait till you're 59 and a half, right? A taxable account, there's no limits, right? Yeah, granted, you're taxed on, the gains that you may make if you happen to sell the investments, but it's like free will. You can buy any investment you want in that account. You can buy stocks, ETFs, right? Mutual funds, now hopefully very soon you can literally buy cryptocurrency in a taxable brokerage account, right? So those three accounts are like, you know, I think everyone should have it, right? So in a way you have to kind of believe, there's so much data to support this, right? The S&P 500 has grown at a rate of 10% since 1926, I believe. So if you, I guess if you're just a cynic and you just, you don't believe anything, I mean, that's your problem. But if you want to be wealthy, at the end of the day, you have to tap into this. You have to believe that, yes, you're worthy of being wealthy, right? I think for some folks, especially in our community and, Africans, you kind of believe that, this mindset of the rich are evil. I think it's something that we grow up, we grew up kind of thinking,
Yeah.
no, the rich are not evil, man. No, I mean, of course, are there people who, had, by dubious ways made money? Yeah. I mean, that's everywhere, right? But for the most part, anyone that's rich, maybe had an idea that they brought to fruition and kind of worked on and eventually became successful, right? So you got to jump in the water, right? You got to have the faith. There's a faith podcast, right? You got to have the faith to jump in the water. God wants you to be wealthy, right? Because he has a plan for you and he needs you to fund that plan. So you need money,
Yeah.
right? For me, I like I said, I like to give. So for every cause that I want to give to, I need money to give to this cause, right? So that's one of the things that's pushing me, right?
Great. So, I just want to make to clarify. So you recommend people have a Roth IRA, a 401k, and a taxable account.
Yes.
I guess my question in regards to that, or just following to that, is how do you go about picking what stock, what is the ETF, a dividend stock, a growth stock, how do you go about picking the strategy you're gonna go about investing in the stock market?
So for the average investor just beginning, and it's not investment advice, just to be clear, but you can start with the S&P 500. That's an index fund that basically tracks 504 of the best companies in America, right? Apple, Google, Microsoft, Coca-Cola, all these big companies. And the great thing with the S&P 500 index fund is literally, once in a while they basically check and make sure these companies they have to have a certain amount of earnings for them to be in the S&P 500. So if your company's not producing, they'll literally kick you out. I believe was it during the pandemic? I think one company was kicked out, right? And Tesla was inserted into the S&P. So that's probably the easiest way you can build wealth. And there's literally people. There's a guy I follow on Instagram. I forget his name. Literally built he's a millionaire. He built his wealth from investing in the S&P 500.
I know you.
Right. I know you think you probably know him too, right? So there are index fund millionaires out there, right? You can just invest in that and call it a day. But my one thing that I say is, okay, so we all use these products, right? Who doesn't have an iPhone? Do you have an iPhone?
Have I?
Right. How many iPhones do you have in your household?
Everyone has an iPhone, MacBook. Yeah, my brother has an iPad, so I love, yeah.
Right, right. So my household, we have two iPhones. We have iPads, right? You know, a company like Apple, literally, they just became a $3 trillion company just, I believe, last week or 2 weeks ago. So if you have a company such as Apple and you use all these products, right? Even if you blindly invest in a company like Apple, I'm not telling you to go buy Apple stock, but such a company is going to be around, until I don't know, God comes, right? So that's a company that you want to also invest in, right? So what I do is I tell folks invest in the S&P 500. You also have sector ETFs that you can invest in, right? So let's say and then this depends on your plan, right? What's important to you. If you're in healthcare like me, you know a lot about healthcare, right? Especially being a cardiologist. I know about companies that make devices. I know about companies that, make products that we use day in, day out, right? Companies like GE, Medtronic, and things like that. I know these companies well. So I can do a little bit more research, right? Look at their whole mission, look at the financials, see if they're in great health, and then also invest in these companies. So once you got the S&P 500 down packed, now you can go to the sector ETF. So you can pick a healthcare ETF. Right now, you can pick a communications ETF. You can pick an industrial ETF. You can pick an ETF on finance, banking, chip makers. Right. So you kind of go down the line. You select maybe a few ETFs that you like, and then after that, now you can go to the single stocks. Right. So whatever you believe in. So Apple, Microsoft. I mean, these are simple companies. Tesla, and a whole list of other companies that you've researched and kind of like and believe in their mission. And that's how you build that portfolio, right? So you want a portfolio that's going to be well-rounded, right? It's not just tech heavy and it's not just healthcare heavy, because then once one is down, it's going to bring down your portfolio and you're going to be upset. And what it's going to do is going to happen is that you're going to sell it and you're going to lock in your losses. Right. So that's what I don't want to happen. So at least have a well-rounded portfolio that you can kind of just let sit there. And then unless something changes drastically about the company that you don't like, don't sell your investments. Even if they go down, buy some more. That's an opportunity, right? You get stocks on sale. The stock market is the only market that when prices go down, people run out of the store. It's like, what's going on here? Every time when I see there's a downturn in the stock market because the Fed made a statement, I'm like, I mean, you know the history of the stock market. Why are you going crazy? So yeah, that's have a well-rounded portfolio.
What's up, family? If you enjoyed this clip, click the link down below to check out the full episode of this interview and remain blessed.